Gold and silver saw a flash crash Sunday night, quickly recovered this morning, but we're still down from Friday's close. Chris Vermeulen, chief market strategist at thetechnicaltraders.com, is back with us to dissect what happened last night and today. Chris, welcome back to the show.
Hey, thanks for having me, David.
So we're still down from Friday, but we were down even more last night. We bounced back a little bit this morning, but again, we're still down since the last business day close. Can you offer any theories as to why this may have happened? And first of all, let's pull up intraday charts of gold and silver, and we can talk about exactly how much they moved overnight.
Sure, yeah. So to give people an idea, if we take a look at this is a 10-minute chart. This is going back to August 5th, August 4th, and pretty much for the last few trading sessions, each day we keep seeing a big wave of high volume selling hit the market. Now, gold this morning, we had overnight trading, and this morning gold fell almost 5% this morning, and since then it's had a knee-jerk reaction. So I do think this is just, we're seeing a lot of pent up kind of nervousness in the market, and we're seeing probably a wave of stops getting run. The market has recovered really nicely this morning, but it is kind of slowly rolling back over. Volume is picking up. So there's a lot of fear in the precious metals market today, but this is actually what we want to see for a bottom to be put in the market. For example, if we were to just take a look at the daily chart here of gold, you can see this long lower wick here that came all the way down to 1680, just below that this morning, and it's rebounded back up. This has broken some lows. It broke this low over here, big volume. This could be like a washout low in the market. And this is what we tend to see when the market kind of gets flushed out, where we see a huge drop, lots of volume, people get really nervous. Doesn't mean today is the low, but I think we're pretty darn close to seeing the low for gold. There is still potential for a bigger drop in gold. For example, if we were to just look at the Fibonacci moves here based on Fibonacci extensions, we're still looking roughly at a pretty significant, actually the spike this morning came almost down to that 100% measured move, which is pretty amazing. Let me just stretch that out. So we really have come down based on this sell-off, this bear flag. It did come and flush and pretty much tag that level and bounce. So this is a really critical turning point potentially for gold and silver in the miners. But I think the market right now is very scared, metals traders. Again, when people are fearful, that's when it's usually actually the best time to buy. And when we look at this intraday chart on gold, you can see how there's lots of volume today and it's trending lower. So there's a lot of people selling, but I think the smart money is probably starting to accumulate today, and this could have been the low. So it's going to be really interesting how this plays out over the next couple of trading sessions.
Metals traders, you said, are scared of what exactly? The news I've heard over the weekend, well, I'm reading the news now especially, the Senate is heading towards a final vote of the bipartisan infrastructure bill, the $1.2 trillion infrastructure bill. They're voting on that this week. That should be positive for gold. Theoretically speaking, it should put even more pressures on inflation, which should, in theory, be good for gold. So I don't know what else people are looking at.
Yeah, I don't know. Everybody sees the market in a different way, and that's why we have a market that moves freely. I see a new plan coming out almost as creating jobs, creating people with a comfort zone. And that to me is kind of a reason to sell gold. You're like, you know what? They're going to be funding. People are going to get back to work. They're going to rebuild America. I mean, that to me is actually a sign that is not that good for gold. I mean, it's printing more money. It's really hard. Everyone sees everything that happens in a bit different light. But today is definitely some type of panic washout low, and based on the volume and the selling pressure since the opening bell this morning at around 9:30. I mean, I think precious metals traders are actually just worried that prices are collapsing and it's going to keep falling. And that's good, because that means gold's probably putting in a bottom and most people are getting out at the worst possible price, which is what typically happens.
We'll come back to the levels in just a minute. But going back to the rationale for selling, so do you think this is more of a risk-on day today? Because I'm looking at the stock market indices, Chris, and not all the indices are up. So the S&P 500 is slightly down, flat. The NASDAQ is actually up today. So how are you reading equities?
Today's a real mixed session. I mean, there's not a whole lot going on. Volatility is pretty low. We're seeing the stock market just keeps bouncing up the 50-day moving average, like the SP 500. and people just don't know where to go. When you look at the SP 500 or the Nasdaq, it's got a beautiful bull flag on the daily chart. It is primed and ready to pop and run. And I think we could see the stock market keep pushing higher. And I think as the stock market goes up, we're going to see continued pressure on precious metals a little bit to the downside, just because people want to go into this risk on market. But people, we're not seeing big commitment into the stock market. It really has been trading sideways for 2 weeks, which is a pause in this bull market. All it means is any day here, it's going to pop and rally to the upside. But there's really not a whole lot of insight in the market. Today I was telling subscribers this morning that the market's not really tipping its hand right now. All we know is looks like the precious metals market is probably flushed out. Gold's kind of hit its measured move. Silver has hit its measured move and actually went way beyond it, but it's recovered back. So I think the precious metals market is kind of where we're going to see some action this week, and we're probably going to see it recover. But other than that, the market isn't telling us a whole lot other than equities are in an uptrend. You need to remain long equities. Technology to me is still kind of the favored, the large blue chips are the big favored stocks. You look at the Russell 2000, if I was to pull up the IWM daily chart here, you can see here it's been trading sideways for pretty much most of the year. And it just is not showing any big confirmation. We want to see the Russell 2000 go into a full-on rally mode. And when it breaks out of this sideways phase, that is going to be probably when the stock market has a huge move. The question is, which way is it going to break? This is kind of a similar pattern to what Bitcoin has done. And Bitcoin finally broke out of its consolidation phase. It broke to the upside. So Bitcoin is back into an uptrend. And we need to see the Russell break out of this, I think, for the stock market to really have some big legs behind it.
Well, if Bitcoin, this is just my theory, if Bitcoin has broken up to the upside, then should it not reason that equities, other risk assets, especially the Russell, for example, small caps, should also break up to the upside? Money is going where risk is.
Yeah, I think so. I mean, Bitcoin's cryptocurrencies, I think, have a little bit of a disconnect, but you're right. I mean, I think money is still going into the risk assets. I mean, that's why the stock market's still holding up and it keeps grinding higher. We keep seeing all-time highs on the SP 500 and the NASDAQ, but we're not really seeing money pile in and chase prices higher. So the fact that Bitcoin is moving up, maybe it's leading the way. Maybe we're going to see small caps, NASDAQ really pop and take off, hopefully this week. I mean, it's primed and ready for another rally, the stock market. So
how did the dollar perform this morning? Can we pull up a DXY chart?
I don't have a DXY, but I have the UUP ETF, which kind of mimics the US dollar. This is the daily chart. It's in an uptrend. It's back up testing resistance. I mean, a big part of the drop that we saw last week was the US dollar had this huge move to the upside. Mm-hmm. Gold sold off big on Friday. And, potentially that's part of the selling today. There was a lot of carryover fear from Friday's drop in gold. And that just maybe created more of that washout low of people kind of stewing and building up anxiety over the weekend. And then when the markets open, gold and silver just crashed. That could have been a good chunk of it. But the dollar's still moving up. And when we look at the weekly chart of the dollar, it is still it's actually putting in what looks to be a bottoming formation. It's starting to work itself up. It is on the verge of popping and breaking on the weekly chart. And if this does move up, then gold and silver are going to continue to be under pressure for probably another month or two, because I think we could see a 2 to 3 week rally in the dollar, and that's going to mute any upside potential for precious metals.
So if I can put all the pieces together then, Chris, I think you're right. I think investors are expecting a recovery of the economy, and we're seeing that in the rising dollar. We're seeing that in an uptick in the real interest rates. So all these things, these two variables I just mentioned, they're both headwinds for gold. An uptick in the real interest rate and an uptick in the dollar, they're both negative for the gold price. So I think that's maybe what's been happening. Maybe if potentially if the economy doesn't recover as well as people might anticipate, then we could perhaps see a reversal in gold and see a rally there. What do you think?
I think you're spot on. I mean, the market always has a way of dragging things out a lot longer than we think. The Russell 2000, based on the daily chart pattern, it's actually showing a potential 30% rally in the Russell if we break to the upside.
Wow.
That means we're going to see huge money pile into stocks again. Everyone is going to chase them. It will be kind of like that chart I showed you a while ago, like that euphoric phase where everyone piles in and everyone says, I'm a hero, I'm a genius. And everyone's like, making money hand over fist. Well, on paper, they haven't actually cashed out. And I think the stock market could rally. I think gold and silver could continue to be under pressure. The dollar could rally. And that could be one final blow off phase in the stock market. I still feel like there's one big push that anyone who missed this last big rally, the COVID rally with investment capital, are going to finally just say, you know what, I am just buying into this market and we're going to see this huge move. And that's going to delay the move in gold, I think, for several months late this year. I do think gold and silver miners are going to have their time to shine, but I have a feeling it could actually be delayed months and months, late this year, potentially early next year, before we go into that big next super run in precious metals. So we need to see which way the Russell breaks and which way the dollar here moves. But there's a lot of energy built up in the stock market, and a lot of people. I was on the phone this weekend with several different people who called me, and they all said the same thing. What am I supposed to be doing? I'm sitting in cash. I need to get into the market. And these are long-term investors. And I'm like, well, we're still in a full-on bull market. I mean, technically, long-term capital should still be long. And one more big push in the stock market is going to suck in all that money. And unfortunately, they're going to be the ones who, watch it rally and then watch it reverse and crash. And if they don't know how to manage their risk, I mean, we're coming into a deadly point of this market, I think, over the next 6-8 months.
Yeah, but last summer, remember, Chris, stocks and gold rallied together. Couldn't that happen again?
It could for sure happen again. As fear rises, maybe we're going to see global money continue to move into gold. But to me, the stock market is the best gauge of human psychology, the mindset of the masses. And when it starts to move, then you can kind of gauge, how is gold performing to the stock market? How's gold performing to how the dollar is moving? And what are utilities, some of the other defensive sectors doing? So when you pull all those pieces together, that's when we really kind of get a good picture of things. And we don't know until, say, we get the stock market breakout and starts to rally. Then we can gauge, hey, is gold or gold miners starting to outperform the market or keep pace? If they are, that might be a leading sector. And they do tend to perform very well in the last final push of the stock market. So you're right. You're dead on that this is the time when they could actually rally. But they might be muted a little while the stock market takes off, and then they'll come to life kind of once that move is in place, and then they start to outperform stocks. So it's going to happen. I mean, it almost happens every time we get into this type of scenario for every bull market top. It just takes a long time for these massive trends to play out.
Well, last summer we had quantitative easing, unlimited quantitative easing, which pushed real interest rates down, which was good for gold, and also it was good for equities as well because you're creating more money supply. I wonder if maybe that's what we're waiting for right now, is that that common denominator of QE that we haven't seen in a couple of months. Maybe the Fed's done with that, in which case it would be probably bad for both assets if they start tapering.
Yeah, it could be. I mean, I kind of talked about it, or I saw something about it last week, but again, it's not about trying to predict where the market's going. It's about following the price. If you try and predict, I mean, that's a tough game to play. You're better to just follow the trend, wait for some reversal, then change your position and follow the new trend. And it's not about trying to front run anything. It's about following it as close as you can safely and staying in those trends.
So the investors you talk to don't know what to do with their cash. Are you still in cash right now? I remember last time we talked, you had moved your positions into equities.
We moved back into equities, a couple months ago on the 18th. And so okay. We're long equities, long-term investment capital. We're still long. We haven't cashed out at all.
Okay.
And we just continue to short-term and long-term. We're still long. And
let's end this back on gold and silver now. You had talked to me about this potential correction last time you were on 2 weeks ago. This correction happened maybe a week after you anticipated, but it still happened nonetheless. So you were calling for prices to go lower, and now you're saying that we've reached a bottom. You're just to recap, you're saying that we can't. I mean, there's a little bit more downside, but generally speaking, are you bearish or bullish right now at current levels?
Depends on the mindset. So, for example, if you look at this weekly chart of gold, it has pretty much reached its 100% measured move. That is close enough to say, hey, it's been tagged. It's also these other weekly lows over here, and buyers stepped right back in and bought it back up. So, I would say the 100% measured move has been hit. It's now bouncing. It is still in a downtrend, so I am bearish on it. But I do think it may have put in a bottom, which means going forward here, we need to see how this is going to play out. Is it going to build some type of launch pad and then eventually start to work itself back up and get back into an uptrend? So
I'm just trying to understand your psychology here. You said you're bearish, but you also think that it's put in a bottom. How does that work?
Right. So so the way it works is this trend is down. The trend is down, right? And I don't pick bottoms. But I think a bottom is getting put in, but I'm not going to pick it as a bottom because I'm not a bottom picker. I'm waiting for this trend to start to rally, start to make a series of higher lows, start to make some higher highs moving up. And that's when it'll have kind of built this rounding formation, this base, a big pattern breakout, and then we can start to see a new major trend. So, I mean, if you're a really short-term trader and you're really aggressive, I think over the next couple of days, we're going to see gold try and stabilize. And I think it's going to try and move itself higher. But again, the longer term trend from this weekly chart is still down. And even over the last 2 months, the trend is down. But just because I'm bullish today thinking, hey, I think this is a washout low, it doesn't mean I'm jumping into it. It just means I'm watching it now because I think it could start to build bullish patterns on the intraday chart and on the daily chart, which would eventually turn into a new uptrend, and then we can get long the precious metals. But we got a lot of work to do before that happens. For all we know, it forms another bear flag, creates another leg to the downside, just like it did in the last month and a half. And that's why you don't want to try and pick a bottom here. It's still more likely to continue to go lower until that trend is confirmed to be reversed.
Yeah. Do you think we can hit 1600? I'm just throwing out numbers.
Yeah, I honestly, I think anything is possible. 1600 would definitely be a pretty easy target for it to hit. If it starts to break this low, that's 1675, this kind of low that over here, that would be that 100% measured move that I showed you. It's this previous low. If we break that, I think we're going to see a lot of big investment money move out of gold because that's a very significant kind of low on the chart. It's possible. At this point, I'm looking for it to stabilize and hopefully it starts a new uptrend. And like you said before, we could start to see maybe this is the bottom in gold and it starts to rally with the stock market for kind of that final big wave up in the stock market going into year end.
On the upside then, what level does it need to breach before you can confirm an uptrend?
I'd be looking for it more or less on the weekly chart, somewhere right around here, around this 1836. Let's take a look at the daily chart and get a quick shorter term view here. More or less what we want to see is typically we want to see two previous highs hit on the chart. It doesn't have to be one of these highs. It could be a new high that's formed over here. For example, if we start to see this rally up, and then it comes back down and flirts around here for a while. And then it starts to rally up as it breaks this high right here. And then it breaks these highs over here. That'd be two highs that it has broken. And this would be like an impulse move to the upside. So it's saying, hey, it's broken one resistance high, two resistance high. That's enough that it's changed the trend. It's broken through two ceilings. And so then any pause or pullback at that point can be bought and it should go up and then work itself through the next resistance level. So either way, I would think there's going to be some internal kind of high down over here. And I still think actually looking at the daily chart, it's still going to be this 1836 area that it needs to close above and hold for that new uptrend to really start.
Excellent. We'll be watching for those price levels. And before we go, Chris, you have a new project that you'd like to tell us about. This has nothing to do with trading, but it's something you're starting. I think it's a very interesting project. I think it's doing a lot of good for the community. Why don't you tell us about it?
Sure. So I'm working with a team here. We're creating a new company called URLYstart, and it's an online gamified way to help kids create a startup business. So more or less, we're the world's first entrepreneurship tool for kids, which gamifies the startup process with rewards, incentives to create an actual income generating business from your home without any prior experience. And the cool thing is, the whole goal here is we're trying to create kids who are making more money than their teachers before they graduate from elementary school, high school, whatever school they're in. We're trying to convert students into these entrepreneurs. And we've got a program where we show them exactly how to build it. We give them all the tools. They work together to build it. They're actually going to be following my daughter, who's built a few different online businesses. And it's like a live kind of course where they do it together as a classroom. It's really amazing to see these kids build these online businesses. My daughter's teaching her friends now how to build them, and they're selling stuff. And it totally changes a child's world, because now they go, wow, I created that. It's now their own little boss.
Do they need coding experience?
Pardon?
Do they need coding experience?
No, it's just drag and drop. It's building micro one-page websites. So it's really simple. You drag and drop it, and the experience and the confidence that the kids have and the excitement they share. I mean, it is really amazing when they get an online sale or somebody comes to pick up something, because they're all selling different things. It's pretty exciting stuff. So that's kind of a movement that we're creating, and we're launching it this September on Kickstarter. It's going to be a crowdfunding, so we're looking for people to help spread the word, and we're planning to hopefully do millions of kids to have their first online website business before they graduate school, and hopefully have a whole bunch of them.
Wow. So what kind of business are we talking about? I mean, I suppose this isn't mowing your lawn or your neighbor's lawn, or setting up your neighborhood lemonade stand. This is an online thing.
Yeah. So, but it could be anything. I mean, we're dealing with kids ages 8 to 18. And so, for example, my daughter she loves dogs and cats and hamsters. So she wanted to do like custom homemade pet treats. Mm-hmm. So we literally built a web page. Took us 26 minutes. We recorded the whole thing. And then we went to the grocery store. We bought the stuff. We made the cookies, did all the cutouts of all these different shaped cookies. And we did photo shoot. We put them on the site. We did it in one afternoon together. And so now she sells these cookies, and she's shipped them to California. She's shipped them to Idaho, to Toronto. But we focus mostly on local pickup, and we just do normal social network with friends and family, because we're just trying to keep it simple for the kids to get experience. But now she gets all these dog treat orders, and she's like, Dad, we got to go to the store and got to make more cookies. And I mean, it's a big process. And I said, well, what's the next way we could take this? I'm like, what if we actually packaged up your whole cookie idea into like a PDF where you do a mini course, you give them your dog treat recipes, how to run this business. You can sell your cookie business idea to thousands of other kids worldwide. You never need to make a cookie again. And she's like, oh my gosh. She goes, let's do it. So that's the next process. Now she's going from physical. Now she wants to sell the digital.
She's gonna be the next Martha Stewart. Is that the plan?
Yeah, exactly. But these kids, you got to go slow. Let them figure out physical products is the way of the past. It's a lot of work, small margins. Wow. Okay. And they see it. You can see it in their eye when it clicks, and they're pretty excited.
When you make a version of this startup for adults, let me know. And we'll talk then.
Yeah. We've got one planned. It's pretty exciting. It's how to build $1 million website. It's going to be live. I'm going to build one from scratch in a new niche, show exactly how to do it. It's exciting. That'll be next spring, but we're focusing on kids because my kids are doing it. I want to teach my kids. So that's where my heart is. I really want to help other kids.
Excellent. Well, best of luck with that, and we'll follow up more as you develop that product. Chris, thank you for coming back on the show, and we'll speak again next time.
Yeah, thanks, David. Always a pleasure. Take care.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more, and don't forget to subscribe and follow me on Twitter @DavidLin_TV.